Based on the historical data and forecast, Bitcoin has shown an overall upward trend, consistently testing and breaching the resistance level of $95,000. The RSI values, while fluctuating, generally remain above 50, indicating a bullish momentum. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for further price movement. Considering these factors, I propose a long-term bullish strategy with a focus on capitalizing on the forecasted price increases. We will enter a long position at $96,500, placing a stop-loss order at $94,200 to mitigate potential downside risks. The initial target price will be $97,300, based on the forecast data. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider accumulating more Bitcoin at $93,700, with a stop-loss at $91,300 and a target price of $96,800. Conversely, if the price touches the upper Bollinger Band, indicating an overbought condition, we will consider taking partial profits at $97,100. This dynamic approach, combining trend analysis with technical indicators, aims to maximize returns while managing risk effectively. The overall portfolio will prioritize the long-term bullish trend, with tactical adjustments based on RSI and Bollinger Band signals. Based on the historical data and forecast, Ethereum shows a generally upward trend, consistently testing and bouncing off the support price of $1,760. The RSI fluctuates around 55, occasionally reaching slightly overbought conditions but quickly retracing. The Bollinger Bands have widened recently, indicating increased volatility and potential for price swings. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $1,810, placing a stop-loss order at $1,780 to limit potential losses. The initial target price will be $1,850, aligning with the forecast and the upper Bollinger Band. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we'll enter a long position at the prevailing price. Conversely, if the RSI exceeds 70, suggesting an overbought scenario, we'll consider a short position. However, given the overall upward trend, we'll prioritize long positions. For the Bollinger Bands, if the price touches the lower band, it signals a potential buying opportunity. If the price touches the upper band, it suggests a potential selling opportunity. Combining these indicators, our refined strategy is to enter a long position at $1,820, with a stop-loss at $1,790 and a target price of $1,850. This strategy balances the upward trend with volatility signals for optimized returns. Based on the historical data and forecast, XRP shows a slightly downward trend with increasing volatility. The RSI consistently hovers around the 50 level, indicating neutral momentum, but has dipped below 50 in recent days, suggesting a potential short-term oversold condition. The Bollinger Bands have been widening, reflecting this increased volatility, and the price is currently near the lower band. Considering the forecast for the next week, the price is expected to continue declining, potentially reaching $2.1. Therefore, I recommend a short position strategy. My proposed strategy involves entering a short position when the price reaches $2.13. Given the downward trend and RSI nearing oversold territory, a stop-loss should be set at $2.17 to protect against a sudden reversal. The initial target price is $2.1, aligning with the forecasted price. If the price reaches this target, we can reevaluate the situation and potentially set a second target at $2.06, near the support level, to capitalize on further downward movement. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB exhibits a sideways trend with fluctuations between the support price of $579 and the resistance price of $601. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. Considering the forecast data, the price is expected to remain relatively stable, fluctuating around $599 to $603. Given this analysis, I recommend a moderately conservative strategy focusing on short-term price movements within this range. We will implement a combined strategy using RSI and Bollinger Bands to maximize efficiency. The primary strategy will be based on the Bollinger Bands. When the price touches the bottom of the Bollinger Bands, which is currently around $579, we will enter a long position with an entry price of $580. The stop loss will be set just below the bottom band at $577 to mitigate potential losses. The target price will be the resistance level of $601. In addition, when the RSI falls below 40, indicating an oversold condition, we will also enter a long position with an entry price of $580, a stop loss of $577, and a target price of $601. This combined strategy leverages both volatility indicators to identify optimal entry and exit points, aiming for a high probability, moderate return investment within the established price range. Based on the historical data and forecast, Solana shows a slight upward trend, bouncing between support at $134 and resistance at $150. The RSI consistently fluctuates, but recently dipped below 60, suggesting a potential oversold condition. The Bollinger Bands indicate that the price is currently near the lower band, further reinforcing the possibility of a bounce. Considering these factors, I recommend a long position strategy. We will enter a long position at $143, placing a stop loss at $134 to protect against a potential downside breakout. The initial target price will be $150, aligning with the resistance level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI rises above 70, indicating an overbought condition, we will consider taking profits or tightening the stop loss. Conversely, if the price touches the lower Bollinger Band and the RSI falls below 30, it could be a strong signal to enter a long position at $146, with a stop loss at $134 and a target price of $150. Combining these signals, the most efficient portfolio would involve entering a long position at $143 with a stop loss at $134 and a target price of $150. Adjusting based on RSI and Bollinger Band signals for enhanced risk management and profit optimization. Based on the historical data and forecast, Dogecoin shows a downtrend with decreasing RSI values, indicating weakening momentum. The forecast predicts further price decline towards $0.166. Considering the support level at $0.163 and the declining trend, I recommend a short position. Entry price should be $0.174. The stop loss should be set slightly above the upper Bollinger Band at $0.175 to avoid being triggered by short-term fluctuations. The target price will be the support level at $0.163, aiming for a profit of $0.011. To refine the strategy, we'll incorporate RSI and Bollinger Bands. When the RSI falls below 30, it indicates an oversold condition, suggesting a potential bounce. Conversely, when the RSI exceeds 70, it suggests an overbought condition, indicating a possible pullback. Given the forecast and the overall downtrend, I'll implement a layered exit strategy. As the price approaches $0.168, I'll cover 30% of the short position. As the price reaches $0.163, I'll cover the remaining 70%. This layered approach aims to secure profits while mitigating potential losses if the price rebounds unexpectedly. Based on the historical data and forecast, Cardano demonstrates a slightly downward trend, especially considering the forecast for the next week. The RSI consistently hovers around the mid-50s, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show a narrowing range, suggesting decreasing volatility. Therefore, a conservative strategy focusing on potential bounces off the support level is recommended. I propose a strategy where we enter a long position at $0.654 when the price approaches the lower Bollinger Band, setting a stop loss at $0.64, just above the support level. Our target price would be $0.681, aligning with the upper Bollinger Band and a reasonable profit margin. To refine this, we can incorporate an RSI filter. If the RSI falls below 46.6, indicating an oversold condition, we should consider entering a long position at $0.651. The stop loss remains at $0.64, and the target price is adjusted to $0.675, a more conservative target given the downward trend. This combined strategy leverages both Bollinger Bands and RSI, providing a balanced approach to capitalize on potential short-term rebounds while mitigating risk with a clearly defined stop loss. This portfolio should yield high returns. Based on the historical data and forecast, TRON exhibits a sideways trend with price fluctuations between the support of $0.245 and the resistance of $0.252. The RSI indicates that TRON is currently not in an oversold or overbought condition, hovering around 53 to 57. The Bollinger Bands show that the price is occasionally touching the upper and lower bands, suggesting periods of increased volatility. Given this, I recommend a strategy focused on capitalizing on short-term price swings within this range. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position when the price touches the lower Bollinger Band and the RSI falls below 50, indicating a potential oversold condition. Specifically, we will enter a long position at $0.246 with a stop loss placed just below the support level at $0.243. The target price for this trade will be the resistance level at $0.251. If the price touches the upper Bollinger Band and the RSI exceeds 60, we will enter a short position at $0.248 with a stop loss at $0.251 and a target price of $0.245. This combined strategy aims to capture profits from both upward and downward price movements within the established range, maximizing potential returns while managing risk through strategic stop-loss placements. Based on the historical data and forecast, SUI exhibits an overall upward trend, supported by consistent closing prices above the lower Bollinger Band and a gradual increase in the forecast prices. The RSI consistently remains above 50, indicating bullish momentum, although it occasionally approaches overbought territory. Considering the current price of $3.42 and the forecast predicting prices above $3.6, I recommend a long position strategy. Specifically, enter a long position at $3.42, placing a stop-loss order at $3.2 to limit potential losses. The initial target price should be $3.68, coinciding with the forecast price on May 11, 2025. To refine this strategy, we'll incorporate the Bollinger Bands and RSI. If the price touches the lower Bollinger Band, which is around $1.75, it signals a potential oversold condition, triggering a buy order. Conversely, if the RSI exceeds 80, indicating an overbought condition, we'll consider taking profits or tightening stop-loss orders. For this portfolio, I suggest allocating 60% of capital to the primary long strategy, entry at $3.42, stop loss at $3.2, target at $3.68, and 40% to a secondary strategy that utilizes the Bollinger Bands and RSI signals. This blended approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink is exhibiting a downtrend, with the price consistently approaching the support level of $13.2 and forecast price is also showing a downtrend. The RSI is fluctuating between 46.6 and 63.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a short selling strategy. We will enter a short position at $14.1, placing a stop-loss order at $14.5 to limit potential losses if the price unexpectedly rises. The initial target price is $13.5, aiming to capitalize on the downtrend. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI reaches below 20, which is not the case in the historical data, it would signal an oversold condition, and we might consider covering the short position. Conversely, if the price touches the lower band of the Bollinger Bands, it could indicate a potential bounce, prompting us to adjust the target price or exit the position. The final target price will be $13.5. Therefore, the portfolio will be a short selling strategy with an entry price of $14.1, a stop-loss price of $14.5, and a target price of $13.5. Based on the historical data and forecast, PAX Gold shows a slight upward trend, supported by the consistently strong support level at $3,300 and the forecast predicting prices above $3,320. Considering the RSI values fluctuating between 48.4 and 62.1, we will implement a combined strategy incorporating RSI and Bollinger Bands to maximize potential returns. The initial strategy will be a long position when the RSI dips below 50, aiming to capitalize on potential rebounds. We will enter a long position at $3,250, setting a stop-loss at $3,220, just below the lower Bollinger Band to protect against downside risk. Our initial target price will be $3,340, aligning with a recent high and a reasonable profit margin. To further optimize the portfolio, we will incorporate a secondary strategy based on the Bollinger Bands. When the price approaches the upper Bollinger Band, we will take partial profits and adjust our stop-loss to break even. Specifically, if the price reaches $3,380, we will sell 25% of our holdings and move the stop-loss to $3,250. If the price continues to rise and reaches $3,440, we will sell another 25% and adjust the stop-loss to $3,340. This tiered approach allows us to secure profits while participating in further upside potential. The final target price is $3,440, and we will close the remaining position at that price. Based on the historical data and forecast, PancakeSwap exhibits a slightly downward trend, as indicated by the recent price dips and the forecast prices hovering around $1.90. The RSI values fluctuate between 45 and 59, suggesting neither extreme overbought nor oversold conditions. However, the forecast indicates a potential further decline, and the price is approaching the support level of $1.8. Therefore, I propose a short position strategy. We will enter a short position at $1.92, placing a stop-loss order at $1.98, just above the recent high and the top of the Bollinger Bands. Our target price will be $1.8, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks below the lower band, around $1.86, it confirms a downward momentum, reinforcing our short position. Conversely, if the price approaches the upper band, around $1.97, it signals a potential reversal, and we'll reevaluate our position. The combined RSI and Bollinger Bands analysis provides a robust framework for managing risk and maximizing potential returns. This portfolio balances the RSI signal with the Bollinger Bands to enhance the efficiency of the strategy. Based on the historical data and forecast, FLOKI shows a generally upward trend with fluctuations. The price has been oscillating within a defined range between $0.0000747 and $0.0000891. The RSI consistently fluctuates, but recently has shown signs of recovery, indicating a potential for further upward movement. The Bollinger Bands have been widening recently, suggesting increased volatility and potential price swings. The forecast for the next week indicates a price range between $0.0000783 and $0.0000829, supporting a bullish outlook. We will implement a combined strategy integrating RSI, Bollinger Bands, and support/resistance levels. Our strategy will focus on capitalizing on potential upward movements while managing risk. We will enter a long position when the RSI dips below 30, indicating an oversold condition. Given the recent price action, we will enter a long position at $0.0000783 on May 6, 2025. Our stop-loss will be set slightly below the support level at $0.0000747 to protect against potential downside risks. The initial target price will be the resistance level of $0.0000891, offering a substantial profit potential. If the price reaches the resistance, we will adjust our target price based on the subsequent price action and market conditions. This combined strategy aims to maximize returns while minimizing risk, aligning with a high returns investment approach. Based on the historical data and forecast, Aave demonstrates a generally upward trend, consistently testing the $172 support level and fluctuating around the $170 to $180 range. The RSI consistently hovers between 55 and 64, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. Given the forecast predicting prices between $173 and $180, and the current price around $176, I recommend a long position strategy. My recommended strategy is to enter a long position at $176, placing a stop-loss order at $172, just below the established support level, to limit potential losses. The initial target price will be $180, aligning with the upper end of the forecast range and a reasonable profit target based on the recent price action. If the price reaches $180, consider moving the stop-loss to break even to protect profits and potentially allow for further gains if the upward trend continues. This strategy combines trend analysis, support and resistance levels, RSI indicators, and Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, Bonk has shown a slight upward trend, fluctuating within a defined range. The RSI indicator has been hovering around the 60 to 70 range, suggesting neither strong overbought nor oversold conditions recently. However, the forecast data indicates a potential slight downward movement in the short term, with prices decreasing from 0.0000186 to 0.0000178 over the next week. Considering the support price of 0.0000164 and the recent price action, I recommend a strategy that aims to capitalize on minor upward movements while mitigating downside risk. Therefore, I propose a long position strategy with an entry price of $0.0000182. The stop-loss should be placed slightly below the support level at $0.0000164, setting it at $0.0000162 to allow for minor fluctuations. The target price will be set at $0.0000188, just below the recent resistance level of $0.0000195. This strategy combines the upward trend, RSI readings, and Bollinger Bands to maximize potential gains while minimizing losses. The portfolio will be 60% long position, 20% cash, and 20% short position. Based on the historical data and forecast, NEXO shows a clear upward trend. The price has consistently been above the support price of $1.11, and the forecast suggests continued growth, potentially reaching $1.3. The RSI has been fluctuating, but generally trending upwards, with recent values above 60, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Given this, I propose a bullish strategy. We will initiate a long position at $1.25. A stop-loss order will be placed at $1.18 to protect against potential downside risks. The initial target price will be $1.28, aligning with the forecast and the upper Bollinger Band. To maximize returns, we will implement a dynamic target price strategy. Once the price reaches $1.28, we will move the stop-loss to the entry price of $1.25, securing profits and limiting potential losses. If the price continues to rise, we will set a second target price at $1.3. This approach combines the benefits of trend following with risk management, aiming for high returns while protecting capital. This strategy leverages the upward momentum and incorporates the Bollinger Bands and RSI indicators for informed decision-making. Based on the historical data and forecast, DeXe has been in a relatively sideways trend with support around $13.1 and resistance around $17.4. The RSI indicates that the asset is currently approaching the middle range, fluctuating between oversold, below 20, and overbought, above 80, conditions. The Bollinger Bands show that the price has been oscillating within the bands, suggesting periods of volatility and consolidation. Considering this, a combined strategy utilizing RSI and Bollinger Bands is recommended. We will implement a long position when the RSI dips below 40 and the price touches the lower Bollinger Band, indicating a potential oversold condition. The entry price for a long position will be $14, coinciding with the forecast price and the lower Bollinger Band. The stop loss will be set at $13.1, just below the established support level, to limit potential losses. The initial target price will be $15, aligning with the forecast price and the middle of the Bollinger Bands. If the price reaches $15, we will move the stop loss to the entry price of $14 to secure profits and potentially extend the target price to $17.4, the resistance level, if the upward momentum continues. This strategy combines technical indicators with support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SUI exhibits an overall upward trend, supported by consistent closing prices above the lower Bollinger Band and a gradual increase in the forecast prices. The RSI consistently remains above 50, indicating bullish momentum, although it occasionally approaches overbought territory. Considering the current price of $3.42 and the forecast predicting prices above $3.6, I recommend a long position strategy. Specifically, enter a long position at $3.42, placing a stop-loss order at $3.2 to limit potential losses. The initial target price should be $3.68, coinciding with the forecast price on May 11, 2025. To refine this strategy, we'll incorporate the Bollinger Bands and RSI. If the price touches the lower Bollinger Band, which is around $1.75, it signals a potential oversold condition, triggering a buy order. Conversely, if the RSI exceeds 80, indicating an overbought condition, we'll consider taking profits or tightening stop-loss orders. For this portfolio, I suggest allocating 60% of capital to the primary long strategy, entry at $3.42, stop-loss at $3.2, target at $3.68, and 40% to a secondary strategy that utilizes the Bollinger Bands and RSI signals. This blended approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Pudgy Penguins demonstrates a strong upward trend, breaking through resistance levels and exhibiting high RSI values. The RSI consistently remains above 60, indicating bullish momentum, and the forecast prices suggest continued growth. Considering the support price of $0.00709 and the recent price action, a long position is warranted. I recommend entering a long position at $0.0104, placing a stop-loss order at $0.009 to mitigate potential losses if the trend reverses, and setting a target price of $0.012 to capitalize on the anticipated upward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading above the upper band, reinforcing the bullish outlook. Therefore, I suggest a portfolio combining the RSI strategy with the Bollinger Band strategy. If the RSI falls below 30, we'll enter a long position at $0.00709, with a stop-loss at $0.006 and a target price of $0.01. If the price touches the lower Bollinger Band, we'll enter a long position at $0.00265, with a stop-loss at $0.002 and a target price of $0.005. This blended approach maximizes potential gains while minimizing risk. Based on the historical data and forecast, Bittensor demonstrates a clear upward trend, consistently testing and breaking through the resistance level of $375. The RSI consistently hovers above 60, indicating bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. The entry price should be $369, coinciding with the first day of the forecast period. A stop-loss should be placed at $344, aligning with the established support level, to mitigate potential losses. The initial target price should be $390, reflecting the forecast for May 12, 2025. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will consider a long entry. Conversely, if the RSI exceeds 80, suggesting overbought territory, we will consider a short entry. If the price touches the bottom of the Bollinger Bands, it signals a potential buying opportunity, while touching the top of the Bollinger Bands suggests a potential selling opportunity. Combining these indicators, I would adjust the target price to $390 plus $10, totaling $400, if the price breaks above the upper Bollinger Band and the RSI remains above 70. This portfolio combines trend analysis, RSI signals, and Bollinger Bands, maximizing potential returns while managing risk.